Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Hello. Welcome to Economy Watch with Governor. I'm Fazeel Najeeb, Governor and Chairman of the Maldives Monetary Authority, the Maldives Central Bank. This is our debut program, and who better to have on a first show about economic issues than Dr. Koshy Mathai, the IMF representative and mission chief for the Maldives. Koshy is also the IMF's resident representative to Sri Lanka. He recently served as IMF's mission chief for Fiji. Before taking up his postings in Colombo in October 2009, he was based in Washington, where he worked on a number of countries, including the US, Turkey, and Zambia. He has been at the IMF for over 13 years. Koshy completed his bachelor's degree at Harvard and his PhD at Stanford, both in economics. Welcome, Koshy, to the program.
Thank you.
Now, you've been visiting Maldives since 2010, and you've been analyzing our economy in depth. But I want to start with this question. What was your first impression when you first visited Maldives in January 2010?
Wow, that would have to be how blue and clean the water is. First impression was definitely that. I'd never seen water like this before.
Okay. You are here, of course, for the Article 4 consultations. Can you briefly tell us what Article Consultation 4 is all about?
Basically, it's a conversation that the IMF has with each of its member countries once every year, or in some cases once every 2 years, a regular consultation about what's happening in the economy, what the short-term challenges are, what the medium-term challenges are, what the government's policies are to address these challenges, and then the IMF's views on what the correct policy prescriptions are. So essentially it's trying to take a step back from the day-to-day pressures of economic analysis, trying to take a step back and take a wide view of what's happening. Normally a team visits from Washington for about 2 weeks and meets a broad array of stakeholders. We meet cabinet ministers in the government, we meet academics, we meet private sector people, think tanks, NGOs, as many people as we can find, we try to meet in order to get a better sense of what's going on in the economy beyond the figures that we see in black and white.
Okay. You've just concluded the Article 4 consultations for this time. So what were your main conclusions and findings, and what are you recommending to the government?
At our level of staff, we actually don't conclude anything. All we've done is had discussions about the Article 4 consultation, but it's only our board, composed of representatives of the country governments that make up the IMF, that is empowered to do anything like concluding. So that's just me being a little legalistic, but to give due credit and respect to our board. Well, we've had these broad-ranging conversations with people, and I think our view is fundamentally unchanged. It's the same view that we had before, which is that the fiscal deficit needs to be controlled. Maldives has two problems, a fiscal problem and an external problem. Fiscal problem is that the deficit is very big, and it's very difficult to finance that, and the debt ratio is rising. But related to that is the fact that there's pressure on the dollar, there's pressure on the rupiah, the dollar availability is not that great. These two are related. Why? Because especially in a small country, if a government spends a lot of money, that spending is likely to translate into import demand. Think about it, a government may have direct import demands of its own. That usually is pretty small, it is so here. But the government also spends on workers, and those workers go out to the shop and buy things. And in a country like Maldives, most of those things would be imported. So by government spending, we create import demand, we create dollar demand. And if we want to make sure that there are enough dollars in the economy, we can do two things. We can either increase the supply, or we can reduce the demand. So increasing the supply is usually a structural thing that takes time to develop new industries, takes many years. But and it's something that has to be worked on, but in the short run, we often focus on reducing the demand for dollars. And in this case, unlike other countries where it seems that there's a huge amount of private sector activity that is driving imports up, in Maldives we think that it's more an issue of the government. The government spending a lot, creating this import demand directly or indirectly, and putting pressure on the reserve situation. So, if we look at it, The root of it is fiscal, and the core policy prescription is to get the deficit down. That will help both the fiscal and the external situation.
Okay, I think you might have had time to look at the government's 2013 budget. Having looked at the figures, do you think that the kind of suggestions that you would make to the government are actually reflected in the figures?
Well, I think this year is going to be a challenging year. We haven't seen a final budget yet, but we've certainly talked to the technical staff and the minister as well to understand what their plans are. I think it's going to be a challenge because last year and this year there was some accumulation of arrears. The government wasn't paying all of its bills. Those bills have to be cleared. So next year there's going to be some additional pressure just to clear the bills that were coming from 2011 and 2012. On top of that, there are the ongoing expenditure demands that would be present in any year. So next year is going to be difficult. It'll also probably be difficult if Maldives is anything like every other country in the world. In an election year, there would always be pressures for spending to increase. Those pressures really have to be resisted because the country can't afford it. And it's creating problems throughout the economy.
Okay, we've been talking about increasing our revenue in many ways. Are there any suggestions that we think we can increase revenue, or you think we can increase revenue? What do you think are the ways, the possible ways?
I think our focus, Governor, would be actually on reducing expenditure. Because if you look at Maldives compared to other countries, revenues relative to GDP are actually quite high already. 29% of GDP. But expenditures are also quite high. They need to be reduced. The revenue side is generally okay, but I would point to one area in particular where there's scope for an increase, and that is in the very important tourism sector. When I went to Fiji last year, I led a mission to Fiji, and I stayed at the Holiday Inn, and I paid 15% VAT and 10% hotel tax. Total of 25% on my room in that country. Here in Maldives, we pay 6% and we pay an $8 bed tax. $8 on rooms which may be $200 or $300, maybe $1,000, maybe $2,000. A very small tax on top of 6%. We're talking about well under 10% of GDP, say 8% of GDP. Much lower than in comparator countries. There's scope to increase it. Tourists are not going to mind. The second point is that the type of tourists who come here, because it's a very high-end sort of market, at least compared to other countries, those sorts of tourists are likely to not be that price sensitive. Their main concern is finding the time to go on vacation, arranging their schedules. If the price is a few percent higher or lower, it probably won't affect them as much as it would if you were catering to a different segment of the market. So in that way, if you were to introduce higher taxes on these customers, the resort owners would be able to pass those taxes on to the customers very easily. They wouldn't have to bear the burden themselves, they could pass it on. And that really is the ideal sort of tax, because the Maldivian people would be enjoying the revenue on the back of non-Maldivians. That's exactly the sort of situation we want in a tax. So we would very much recommend raising the TGST rate quite substantially, and also keeping the $8 bed tax, which is due to expire, to fall off at the end of next year. We would recommend keeping that in place into the indefinite future.
But the concern in that will always, I think, be, and this has been raised by some of the participants in the tourism industry, that if you raise the TGST too much, this will send an undesirable signal to the tourists who are coming, that Maldives is taxing too much.
I don't think it will send an undesirable signal. I think it will send a signal that Maldives is a self-respecting member of the community of nations that realizes its worth, realizes what it has to offer, and is charging tourists appropriately for that. Up till now, the tourists have been having a nice free ride on the back of the Maldivian government's fiscal coffers. And I think it's time for that to end.
Okay. Now we also have, on the external side, we have problems. Everybody knows that. We have balance of payments deficit of around 30% of the GDP, thereabouts. But in order to address that, my view is that coupled with the fiscal adjustments that need to take place, we also need to be thinking about doing some more work than simply tourism. Do you have any views on this?
Yeah. Well, I think you're asking one question, but I'm going to take it in a slightly different direction, if you don't mind. We think that there's an important role to be played in terms of cutting the fiscal deficit. But when you've got a major problem in front of you, you must use all the instruments at your disposal. Spread the burden of adjustment across as many instruments as possible. So let's adjust the fiscal sector a little bit. Let's also tighten monetary policy. By tightening monetary policy, we are directly reducing the demand for imports. We're helping the dollar situation. We're reducing the amount of liquidity out in the system, and therefore allowing, basically keeping the parallel market rates down, because there are fewer rupiah bidding for the same pool of dollars. Tightening of monetary policy along with a fiscal tightening will help to spread the burden and probably do things in a more realistic fashion. I think, though, you were asking me more about tourism as a sector versus other sectors of the economy.
Yes.
Developing new sources of dollars
foreign exchange
into the economy. And I think that's a critical thing, because Maldives is probably the most tourism-dependent economy in the world, or one of them at least. If you look at the national accounts, 30% of GDP is accounted for by tourism. But if you look at all the direct and indirect effects, you could easily be looking at a contribution of 60 or 70% of GDP. So quite a large share of GDP is driven by tourism. And we need diversification, because if you're basing yourself just on one industry, well, when the world economy turns down, when Europe has some problems, well, you feel the brunt of it. If you're diversified across different bases of production and income generation, well, you're more protected from those sorts of downturns. What can Maldives go into? I think fisheries has been historically your other main product. It's gone down a lot. But from our discussions with those in that sector, and we're not experts on this at all, but I'm just relating what I've heard, there seems to be a lot of potential for development of aquaculture. There's been some restructuring of some of the main companies in the sector, which the situation may not have worked well before, but it seems not to be working well at all now. So some kind of structural resolution to that problem needs to be found. I think fisheries definitely could be built up. Things that we've heard from other people in government are looking at shipping, off-port services. So not that you want in Maldives to build huge and very capital-intensive ports, but there are some ships that evidently want their services without having to dock at a port. Could Maldives provide bunkering at sea? Could they provide crew changes, waste removal, things like that, or provision of food and water? Maybe that would be a possibility. And from what I understand, Maldives lies in the middle of two shipping lanes. So perhaps there's opportunities for that. We talk also about IT, going into business process outsourcing, IT services, maybe even financial services. For all of these, there's a need for more skilled people. There's a need for more infrastructure, probably. Communications infrastructure is already very good, but there may be a need for even more development. But these are things that the government has to be thinking about, and not just the government, but the private sector as well. The whole economy has to be thinking. All participants need to be thinking about where Maldives is going to be 20 years from now, or 30 years from now. There's no point just looking at the models of the past. We have to look at what's going to take us into the future.
Right. Let me now take you to the financial sector. You've had some time to sit with some of the bank managers here. In 2009-2010, the MMA introduced 11 prudential regulations, and a banking act was also introduced in 2011, at the beginning of 2011. For this, MMA was criticized by almost all quarters in the country. Do you have any views on whether or not these were the right measures that we introduced?
Well, not just because I'm sitting here as your guest, but because I truly believe it, I say that those were absolutely the right measures to take. I mean, these sorts of prudential regulations are basics in every country in the world. You can't have a banking sector without this sort of minimal regulation on provisioning requirements, on single borrower exposures, on net open positions in foreign exchange of banks in different currencies. These are the basics. You can't let a banking sector operate without regulation. And you have introduced the basics. Now, the criticism that people can levy is that perhaps we should not assume that a banking sector can comply as quickly as we might have wanted initially. Because after all, a point we've heard from some banks is that they had already extended loans. They had already extended loans maybe that were very concentrated on a single borrower, and they were 9-year loans. How are they to pull back those loans and reduce their single party exposure within the 2 or 3 year time horizon that was given to them? That also is a reasonable point. So I think during the transition, as you introduce these new regulations, there may have to be some flexibility. And indeed, you have shown flexibility. In fact, in the past, as you know, we have criticized you for showing too much flexibility.
Right.
We have thought that you needed to be tougher, that you don't need to show so much understanding, that you need to be a tough regulator and basically assert those basic principles of an economy. But still, at the same time, we recognize that we live in the real world and not in theory books, and some sort of rational compromise sometimes has to be reached. But most of the time, a regulator has to be a stern and steely-eyed individual who refuses to bend and who upholds the principles that keep the system safe. These rules are not there so that you can tick things off in a book. These rules are there to keep all of us safe. Why do we have capital adequacy minimums? It's so that there is a buffer of capital so that depositors are protected. You don't want to have a bank operating and earning profits on the base of a very thin base of capital, because if something goes wrong, who's going to take the loss? There are no shareholders there with a lot of capital to absorb the loss. It's the depositors, the ordinary man in Maldives, who will take the loss, and nobody wants to see that happen. So having capital adequacy is a very important thing. Making sure the quality of the asset book is a very important thing. And by introducing these regulations, you are moving in exactly the right direction.
Okay. So I have a final question for you. Now, we all know that things are very difficult economically for us, and there are some very, very tough and very hard decisions that needs to be made, and this is going to be very painful for most of us. Do you have any message to the policymakers, to the institutions, the parliament, the government institutions, and others, and the public as well?
I think the message is that everybody is in this together. Maldives is a small country. I think in every country you can say you're a family. In Maldives, you can especially say that you're a family. It's a small, close-knit community. There are problems in the economy, but there are problems that can be addressed, problems that can easily be addressed if only the parties all work together. And I would beg that that is the priority, that all parties in government, outside government, private sector, all work together to find some solutions to the fiscal, external, financial, and other economic problems that Maldives faces.
Okay, good. Thank you, Koshy, for being on today's program. It's been a pleasure to have you.
Thank you. Real pleasure. Appreciate it.
Let me conclude today's program with these thoughts. Today, Maldives is experiencing adverse economic challenges. Our worst economy lies within the intractable fiscal deficit. We need to fix it, and fix it soon. Ideally, the government revenue must at least match the government's current expenditure and debt repayment. In this case, a deficit will only arise if there is government investment. Assuming there is government investment, for example, on infrastructure amounting to, say, 1 billion rupiah, then the question is, how can the government raise 1 billion rupiah? If the government is reasonably assured of 500 million, let's say the Chinese government grants 300 million rupiah and the Indian government loans 200 million, then the government only needs to raise 500 million rupiah more. An examination of domestic treasury papers market indicates the government will be able to raise these 500 million rupiah. In this case, the government has successfully financed a deficit budget. But in real life, matters are not this simple. To begin with, the government revenue is not sufficient to match the government's current expenditure and debt repayment. This means that the government must finance this by grants and borrowing, although borrowing to finance current expenditure and repayment of debt is bad financial management. The immediate challenge for the government is to achieve a sufficient enough reduction in expenditure and simultaneously achieve a sufficient enough increase in revenue to bring the deficit down to a lower level while keeping in check the public debt and balance of payments. We cannot achieve this if we work our way up on the budget. Instead, let's give ourselves a target for fiscal deficit and then work our way down. By setting a target for deficit, we create a trade-off between expenditure and revenue, thus enabling us to settle at a particular point that gives the optimum level of expenditure and revenue. Unfortunately, we have to make some hard decisions. Together, we have to bear some pain. Thank you for watching today's program. We will see you again in the next show of Economy Watch with Governor. Assalamu alaikum wa rahmatullahi wa barakatuh.